and welcome to Help Nobody Told Me. I'm Shannon Johnson, your co-host, and I'm here with Jasmine Shapiro, my partner at Berkshire Hathaway Home Services, and we have our guest today, Erica Minchella, and she is an attorney specializing in real estate and an author of the book Transforming Troubled Real Estate with Strategic Solutions. So we are so excited to have you today.
Thank you.
And tell us a little bit about your journey through real estate and law and what
Sure.
you've done to get where you are today.
Okay. So I was a high school English teacher, and I was about 4 or 5 years older than my students, which is why I can talk to anybody now. I have no concerns at all. But it was after a year of that I decided that was not really what I was cut out for. And so my sister was an attorney. She convinced me to go to law school. I had to work my way through law school, and my last job was with a bankruptcy firm. And I fell in love with the area of law because you have a magic wand in your credenza and you get to wave it over people and change their lives. And that was really satisfying for me. I did that for about 18 years. When I got out of law school, I found a job in bankruptcy work. And my kids hit their preteens, and my husband and I looked at each other and said, they need a part-time chauffeur. And he was traveling for his business, so I agreed to change my practice over to real estate, because you can tell a real estate client when you're going to do your closing. You can't tell a bankruptcy judge when they can hold their hearings. So I started doing real estate. I had done real estate because it really is part of bankruptcy. One of the beauties of bankruptcy work is that you really get into every other area of law. You really need to know a little bit about just about everything. So I had already been doing some real estate work. It was an easy fit for me. I started representing some hard money lenders who were doing some wonderful work with people who were in foreclosure, who had equity in their property. And so what he would do, or what they would do, I think I had 4 or 5 lenders I was working with, what they would do is they would give the people the money to get out of foreclosure. They would take a second mortgage against their property, give them 2 years to rehabilitate their credit, and then let them refinance. They were wonderful programs. I was really proud to be part of that. I mean, they were high interest rates, but it was a manageable program until 2009. And then the equity just evaporated, and a couple of them went through bankruptcies of their own, the lenders, or had other ways that they had to rehabilitate their finances. In 2008, I moved to the office that I'm in Skokie. It was actually April 1st, 2008. I refer to it as my own personal April Fool's joke. Because there was no business. The phone didn't ring. I didn't know what I was going to do. So I went back to my roots, which was working with people in financial trouble. And that's how I started getting involved in foreclosure defense work. I could never represent a plaintiff, even if it was a friend. I just can't do plaintiff work. But I built a good practice doing defense work, taught myself short sales, and then started doing other work to help people who were in financial trouble. It's been a very satisfying career. I've been doing that for about 24 years, 25 years now. And I'm really happy. I mean, there are always stresses in any business, especially in the law business. But that's how I got to where I am now. It's what caused me to write the book, even though right now people are not in that much of trouble with their homes, with foreclosures. That isn't a large part of my practice. I wanted a manual for people who were in financial trouble to be able to look at in the privacy of their home, because it's such a horrible thing to go through, and you're afraid to talk to anybody. You don't want to talk to your neighbors. You don't want them to see a for sale sign in front of your house. especially if it's the bank's for sale sign.
Right.
You know, there's so many things that are a stress. You can't talk to family. Who do you talk to? Yeah, maybe you'll find an attorney like me or many of my colleagues. But this is something you can look at in the privacy of your home and say, okay, maybe I can do this, or maybe I can do that. Maybe I can find a real estate broker who will be good to help me with a short sale, or can help me get enough money out of my property to allow me to not have to do a short sale, that I'll come out with some money. So that's what the book is, and I think it's about 72 pages. It's not real long, and it's very, very short chapters that you can just look at and say, oh, this applies to me. So just one more thing about my background. In 2010, I realized that I couldn't keep up with all the defenses that there were. Really, I mean, the loans were so crazy from the beginning of the 2000 era, that I couldn't figure out how to run my practice by myself with a part-time employee, going back and forth from downtown to Skokie, and figuring out, doing this research. So I started pulling defense attorneys out of the courtroom after I could see which side of the bench they stood on, and said, would you like to start a group of foreclosure defense attorneys so that we can learn from each other? And we sat down in October of 2010, got up to about 80 members.
Wow.
Somebody looked across the table at me and said, it's your idea, you're president. And I've been president ever since. We're now at about 40 members, because there just isn't as much work. A lot of people had to drop out of that work. But I've also managed to be the president of the Association of Foreclosure and Consumer Protection Attorneys for 14 years.
And you teach. And you do talks.
Yeah, I teach.
How do you sleep?
Well, it's kind of funny, because people will say to me, you're always busy. And it's like, well, yeah, I guess I am. But my life is just very full. It's
But you enjoy it, which is why you do it.
I enjoy it. Yeah, no, I have no intent. If I could design my perfect job, it would be doing all of that stuff, bring the business in, decide the way the case needed to be handled, and then hand it off to somebody to do the minutia.
Right.
I see myself as a forest kind of person. I see what needs to go on, what needs to be done, how you proceed forward. I just don't want to be bothered with the trees. Don't bother me with the detail. There's so much more fun stuff to do. So.
And even with all that experience, you and I were talking earlier, we're still learning.
Oh, absolutely.
Every
Absolutely.
deal we work on is something new.
Well, you taught me something today that I
See?
hadn't realized. Yeah.
But that's what's so nice about this business.
Absolutely.
It's not the same every day.
Absolutely. Yeah. No, I am never bored, ever.
So, and then we also asked you, what is your prediction about foreclosures with this crazy seller's market?
Okay,
And people offering way above asking.
Sure. I'm going to take you back a story real quickly, because I remember sitting down with a client in 2006, 2007, looking at the loan. She was having friends buy her unit. She was going to stay in it. She was going to continue paying it. They were giving her so much money for this unit. It was so out of line. And I'm going, this doesn't look right to me. This just doesn't look right to me. And sure enough, she wound up in trouble. The two friends wound up in foreclosure. She and her sister, who had owned the unit with her, wound up with tax problems for selling the unit at such a high rate. And all that time I'm going, this doesn't look right to me. As soon as 2008, 2009 hit, I started realizing that gut feeling was right.
Yeah.
And I watched over what was going on, and I've kind of tried to predict since then. I thought there was going to be more foreclosure after COVID. I thought that the modifications, that the forbearances were going to lead to more foreclosures, and they didn't. Thank goodness they didn't. I don't think we're ever going to see what we saw in 2009, 2010 for a few reasons. First of all, the CFPB, the Consumer Financial Protection Bureau. They changed the lending process for the better. Now, I can't read a CD to save my soul. I still have to rely on the master statement, but they did so many good things to change the way lending proceeds that I think that the risks are much lower. And the Fannie and Freddie loan documentation has changed. It changed just in July of 21, I don't think we saw until about 22. I don't think I saw my first changed mortgage mortgage papers until about 22. Because they started adding in all these questions that people had during the meltdown. Like, does private mortgage insurance insure me? No, it doesn't. It insures the lender. Do I have any rights for modifications? What happens if I make a partial payment? Those are all in the mortgage documents now. So the CFPB really did some good stuff, and I think it will help people going forward because the loans are tighter. But we have people buying properties in insane types of transactions at the absolute top of the market. Well, what happens when people's lives change? They get divorced. They get, they lose their jobs. They get jobs in other cities. They have kids. They have parents who have to move in with them. When those things change and they have no control over it, and they've now bought at the top of the market, and may not be able to sell at the top of the market again, that's when we're going to start seeing some foreclosures come through. I don't think we will ever see, at least not in our lifetime, I don't think we'll ever see the breakdown that we saw in 2009, which a lot of it was just that crazy lending that was going on.
Right, no documentation, just... Sure,
right.
You want to borrow this money?
Fog the mirror. So I just don't see it as much of an issue, but it will come, and it will come because there's no equity. When I do a closing with a client, I always talk to them about re-amortizing their loan, about learning how to pay your loan faster so you create equity. Because if you have equity in your property, you won't have to worry about a foreclosure. You will have the ability to make decisions. And that's really what the bottom line is not to get so caught up. Because, the American dream is being able to have the house that we want, and too often that's a matter of buying at the absolute top of your ability to pay. And if you're not doing that, if you're giving yourself some room, you get to make choices. And so I always talk to my clients about re-amortizing their loans.
You don't want to be house poor. Because that leads to foreclosure, unfortunately.
Yeah.
And I remember when you gave the talk, when we met you, you were telling us how banks really want you to try and sell your house.
Absolutely.
And be able to get as much as you can. They really don't want to take your house away from you. That's the last resort, right?
Absolutely. I mean, there's some lenders that have no ethics about the way, I was trying to think of the right word, no ethics. I mean, if you're in default, they want you out, all right? They don't care. But that's not the majority. That's the minority of banks. They do want to see you get a solution. And, this new loan documentation actually provides for more options for getting to solutions. We have the right to ask you to go into mediation, to go into a modification. That's great news.
Right. So tell us a little bit about what the foreclosure procedures look like, what that process looks like in the state of Illinois.
I was just going to say, I can only tell you about Illinois. But I'm kind of limited to Cook County right now. My biggest fear when COVID kind of petered out, that all the cases that I was handling in Lake and DuPage County would then require my appearance, and it's an hour ride each way to either of those counties. So we've kind of limited our practice now to Cook County. And the reason why I say that is that the judges make a lot of the decisions as to how cases will proceed. I mean, there's some that are really very defendant-oriented. There's some that are just rubber stamps for the plaintiff. In the normal process is that the first 15 days, if you're late, you're going to incur a late fee. If you're late in 30 days, you're now in default on your mortgage, and that's when the phone calls are going to start. They will go on for about for 3 or 4 months. Generally in the 4th month, you will get the letter from the attorney saying, we're going to proceed to foreclosure. We are, if you have you believe that this information is wrong, you have to tell us. You have 30 days to tell us. That doesn't mean we can't proceed. And that honestly is the way they're going to approach this. Generally, if it's one of the larger filers, they're going to file generally in that 4th, 5th, 6th month. Once the case is filed, they have 30 days to get the borrower served with the lawsuit. It might happen within 30 days, it might not. If it doesn't happen within 30 days, they can appoint a special process server. Actually, in Cook County, they always can use the special process server. They don't use the sheriff. If they don't get you served the first time, they may try again. After a while, they can just publish. I think there's been some discussion about changing the way that you can be served so that you might be able to be served by email, because generally lenders get your email address. They might be able to serve you by publishing on your door. Isn't that lovely? Yeah. So right now, the standard way of doing it is to have somebody walk up to your door and serve you with your papers, or else if they can't do that, then they publish. The advantage of publishing is that you can't be held liable for any deficiency, any shortfall in what the lender gets for your property if the process concludes. The problem with that is that you might not know that you've been served. I want to say this carefully, but needs to be said. Process servers don't always serve people, and they say they do. Let me just leave it at that, okay? Because that can create problems in and of itself.
But you know you're late.
You know you're late, but you don't know what your obligations are in order to respond. And fortunately, the Constitution says, and it covers everyone, that we're entitled to due process. That we're entitled to know if we're being sued. And if we haven't been sued, that's where the publication comes in, because that's public knowledge that your property is being foreclosed on. And very often you'll get notices, a lot of times from attorneys who do foreclosure work, that you're in foreclosure, okay? So there's a method to make sure that people know. If a process server says they served and they didn't, that actually leaves a borrower in the absolute dark. I have a client who didn't know she was in foreclosure until the sheriff came to evict her. Long story.
She just thought she was going to stay there and not pay.
But she didn't know that. Yeah. She was a very.
She didn't know the time was up.
Exactly. And I mean, she didn't get a chance to try and modify. She didn't get a chance to try and sell. She didn't get a chance to defend if there was a defense. So yeah, she knew she wasn't paying her mortgage, but that's what due process is about, is giving us the opportunity to know that we're in litigation and to respond appropriately to it. Okay. The next step in the process is that the court, when the case is filed, the court will set a case management hearing. It's generally 2 to 4 months out from the filing. What the court wants to know is, have you served? And if you've served...
So at that point, you're probably
you're already
How many months in?
6-8 months
Okay.
delinquent. They want to know whether the case is proceeding or whether there's something else that needs to be done. Generally, for a defense attorney, if our clients have gotten a hold of us, that's when we get involved in the case, or shortly thereafter. Usually the best time for us to get involved is when there's a default hearing, because the judges will give, every judge in the foreclosure division will give a defendant a chance to defend. Because there are any number of reasons why they might not have known about it before then, why they might not have gotten an attorney involved before
So is that
then.
just in Illinois?
It's a Cook County.
Cook County?
Okay.
So like listeners who are listening from other states, that may not apply. We're just
Correct.
talking about Cook County, Illinois.
Correct, because in some states, there isn't a judicial process. It's a matter of getting served, and you have a certain amount of time to get out. In California, there's no deficiency. There's no way they can go after you for a deficiency, so it's a different process there. It's a different mindset there. Imagine if you signed a mortgage and you knew that you would never be held liable, and you can't pay the mortgage, you move. You've got no liability. Maybe you
Wow.
have an emotional attachment to the property, but you have no liability.
And it doesn't affect your credit? Probably.
It probably does, because every time you make a mortgage payment, it shows
Yeah.
up on your credit.
Right.
But even so, if you don't have a $100,000 judgment against you, it can go a long way toward allowing you to rehabilitate yourself.
Yeah.
So after the
So when you get
The
served,
hearing.
well, wait a second, let's just back up a minute.
Uh-huh.
So if you get served, that's when you should contact a foreclosure attorney,
Absolutely.
right? Okay.
Absolutely, because that's when the strategy will
Okay.
kick in. And, some of that is a matter of strategy between the client and the attorney. I mean, the first question I ask a client is, what do you want to do? What do you want to accomplish? Do you want to try and modify your loan so you can stay there? Do you need to stay there for a certain amount of time, like to let the kids finish school? Do you want to make sure that we preserve your credit so that you can live to buy again? That strategy is really critical for people. Once I know that, I can formulate a plan as far as what will happen with the foreclosure.
And let's say you're somebody who didn't reach out to an attorney yet, but you get this notice. Do you call the bank? Does the bank give you
Most
options,
likely.
or will they tell you you should
Most
contact
likely,
an attorney?
yeah. Most likely the bank will allow you certain options. Just about every bank has a website with options for people who are in trouble, especially larger banks.
Mhm.
Absolutely have this on their site. I would generally recommend that if you're in financial trouble and you're going to look for a modification, that you also find either a service company that works with people
Mhm.
who need modifications, or that you work with an attorney who knows how to do modifications, because you're doing one and they've done hundreds.
Right.
All right? You don't want to be doing something as a one-off and
Right.
expect that it's going to work. 'Cause sometimes, it's changed a lot since the recession, where we always kind of felt like it was just a different way of saying no to get people resolved.
Yeah.
But banks have learned a lot too. And their feeling is that if we can solve this, let's solve it. But they're not there to make it easy for you. They're
Right.
there to make it easy for them. If you've got a lot of equity in your property, they may well say, I'd rather see you sell it, because I want my money, I want to get out of this. But if your margins are real tight, they may well say, look, let me let you stretch this out, because I'm making money every time you make a payment. Okay? I will make money on the back end if I put your default on the back end and just let you get caught up that way. So there are a lot of different ways that they might approach it. But that would be really, if you're not going to call an attorney to get that advice, that's at least one thing you can do, is reach out to your bank, look at their website, see what they have for forbearance or modification programs.
Interesting.
Okay. So just to finish up, and I can do this pretty quickly, is that once the case starts moving along, the defendant has to file an answer. If they have valid defenses, that will go on and be litigated for a while. At some point, the lender most likely will bring a motion for summary judgment, which says we don't have any factual differences in this. We're entitled to our judgment as a matter of law. Borrower can defend. Lender will come back and say, really, you haven't raised any issues, and we're going forward. Once judgment is entered, there's a 90-day redemption period. It's different in Illinois than just about any other state. Usually the redemption period is before the judgment, and the judgment is the last order of the case, which makes sense to most litigators. In foreclosure, the judgment only means that you have another 90 days to try and resolve your problems. At the end of that 90 days, if no resolution has been made, then the sheriff's sale will be conducted, judicial sale, and then the lender has to come back to court, get that sale approved, and that's the final order. That final order also includes a possession date, usually 30 days. We can beg for 60, and that order is the appealable order. So you don't get to appeal until about 4 months after your judgment is entered, which again is a really different way of looking at litigation than what a normal piece of litigation would be.
Wow.
Normally you get a judgment and you can appeal
Right.
in 30 days.
Do most people go into foreclosure because they've lost a job, or is it a variety of reasons?
It's really a variety of reasons. One of the problems I'm seeing right now, which is very, very sad, is people in reverse mortgages who just are missing their obligations. They think that they're paying their real estate taxes, they'll think that they're paying their insurance. If either one goes delinquent, they can be in foreclosure. If they don't answer the letter that says, are you still living in the property, because that's a requirement under a reverse mortgage, they can wind up in foreclosure. And the worst of it is we're dealing with a very fragile population. So that's one of the reasons that I'm seeing, and I'm seeing a little bit more of it than I wish I could.
Tell us about a success story to lighten the mood.
Okay. I'm happy to.
Where you were able to help a client avoid foreclosure.
Got a great, well, yeah, I've got a number of stories, because I keep joking that I can't win a foreclosure case. I won one. In 14 years, I won one foreclosure case. We actually got it dismissed for cause. But in my philosophy is that if I keep a judgment of foreclosure from being entered, I've got to win. So getting somebody a short sale, getting somebody a modification, conventional sale. But I have a story that really has helped me get through a lot of this, because it's hard, it's depressing work. I had a couple who had really pulled their finances together well. They had everything in line, but they had a home equity line of credit as their second mortgage that expired. Okay, so generally HELOCs are 10 years. It expired, and the lender would not renew it. And so they were headed toward foreclosure. And there wasn't enough equity in the property, and that was the reason why the lender didn't want to renew the HELOC. They were headed toward foreclosure. We got them a short sale. 2 years later, they were back in my office to buy another property in the same neighborhood at about the same price point, with all their finances in complete order. And it was because they never went through foreclosure. They never had a foreclosure judgment against them. They did everything. They had known from the beginning that they were going to have to do things to pull their credit together. They were very responsible about their finances, and they were able to buy again in 2 years.
That's
So that's
incredible.
one of my favorite stories.
Yeah.
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 Yeah, we were working with a client and they missed like one car payment and all of a sudden their credit was shot.
Messed everything up and like put them in a waiting pool, you know, where they got to get it all cleaned back up before they can enter the buying field.
Just
and
one
that-
payment.
Yeah, and that too can be a problem with the identity theft that is going on. I mean, that can
Yeah.
destroy somebody's credit as well.
Right.
And especially with a HELOC, because the lenders have different criteria
Right.
for what they will accept for the behavior going forward.
Right.
So, what can a homeowner expect during the foreclosure process, and how do they prepare for that? Like, it's going to be an emotional journey. So
Sure.
how do you prepare them for that?
Well, that's why I asked that first question to begin with. What do you want? You know, tell me what you want to accomplish. I have clients who, I think 4 years ago, knew that they were in trouble, and we tried for modifications. They wanted to stay in that house until their daughter, who had a learning disability, until she graduated college. They knew that she needed that stability. What did I say, 4 years ago?
Mhm.
We're still not out of foreclosure, okay? I mean, eventually the modifications died. So they told me what they needed. I told them I couldn't do it because it was way beyond anything I thought I could do. And I'm still doing it, okay?
Wow.
So that, you know, having an attorney who understands what your requirements are and how to deal with it, and keeps you advised of what the timeframes are, so that you don't have a surprise. If the judgment is entered, is the sheriff going to be at my door? No. You've got this other 3-month period. You've got another month before the hearing on the approval. You've got another 30 days. You've got 5 months. If we go to judgment, you still have 5 months. Okay? There are other things that I've been able to help clients with, because there, at least in Cook County, there are certain requirements as far as, let's say a husband and wife are on the mortgage, but they have children living in the property, adult children living in the property. Well, you have to evict you can evict the husband and wife, but you can't evict their children if you haven't named them in the foreclosure. There's a different process for that. If it's an individual and a live-in partner, the live-in partner still has some rights. We're back to due process, okay? So it really is a matter of understanding what's going on with your client and what strategies you can use to make sure that they know what's going on. The worst thing you can do is bury your head.
Right.
Correct.
So, thank you so much for
And you
joining
do
us.
regular real estate.
Oh, sure, because I can't deal with a depressing area of law.
No.
Yeah, no, I do.
So, because we
do.
were talking and you were saying how much you enjoy
So Erica
real
will
estate.
also help you just close on a new home.
Absolutely. And you know, the interesting thing is that watching all the things, you know, reading that mortgage really helps me to do a better job of closing for my clients, because I can tell them all the pitfalls that they might come into. That's what started this whole idea of re-amortizing your mortgage, is that I wanted people to have equity so that they didn't have to wind up in foreclosure or a short sale. So yeah, that's the fun part of my practice.
Well, thank you so much for
You're
being
welcome.
with us
Thank you for inviting me.
today.
Absolutely,
Yes.
we've enjoyed it. We
Appreciate
always
it.
learn so much when we talk to you.
Thank you.
And we will put all of your contact information in the show notes.
Thank you.
So if anybody does need to reach out to you, they will be able to.
Okay.
Absolutely.
Sounds great.
So thank you for joining us today, and join us next Wednesday for another episode of Help Nobody Told Me.